And here we are with another educational video on market structure. We're gonna have a look what is market structure, how to identify it, how to understand it, what actually lies behind market structure and why is it so important. And most importantly, we're gonna learn how to trade it and how to develop a little trading plan around market structure and how we can put it into the best of our advantage, right? So, if you have been watching most of my weekly outlook and setups, you will see that I keep it so simple. Like I just have two rectangles and one line or something like this. I just mark market structure and this is all I need to trade profitably. Like you don't need all of those trend lines, rectangles, triangular formations, fibs, Elliott wave and all of that stuff. I'm not saying that it's not working, but you can just keep it as simple as possible and still win in that game. And in this video, I'm gonna lay out the concepts of market structure. I'm gonna provide you with a little bit, like with a few steps that when you just open your chart, you know what to look for, you know how to draw it, you know how to spot it. And then from then on, you can try to figure out how to enter because there are multiple ways to enter the market using market structure. In my course, I teach absolutely everything in a detailed manner and all the market structure formations, but we're gonna try to keep it simple right here, as educational as possible and as beneficial for you. Alright, so if you're new to the channel, it's all about trading. I share weekly analysis every Saturday. I share educational content, psychological and emotional personal journey as well. So make sure to subscribe, hit the notification bell in order not to miss the videos that are upcoming. And if you already did, let's see what do we have for this video. Alright, so what do we do when we open a chart? What is the first thing that we want to see? We want to see the overall direction, guys. And it shouldn't be rocket science. You just have to open your chart and say, is that up, down, or sideways? This is it, up, down, or sideways, because those are the directions that the market can be into. It can either be choppy or consolidative, or it can either be trending up, or it can either be trending down. It's much more complicated than that, but just when you open a chart, what is the market doing? So when we open this chart, what is the market doing? Well, most of you will say it's going up. Alright, this is not what I see, but that is perfectly fine because we can see that overall the market is going up. Then, what do we have to spot? We have to spot the market structure, and this is where it gets complicated, guys. And I'm sure that most of you know what market structure is, and I don't think we have to go back to the drawing board to draw like lower highs, higher lows, like this. So this is the basic concept. Make sure to know this because this is so crucial. It's so easy, but it's so crucial. So you have potentially a consolidation. When the market breaks above that consolidation, you have a high, right? Then when the market pulls back, you have a low. And then if the market breaks this high and trades higher than it, this one creates a higher high. So this high is higher than the previous one. And then when the market pulls back potentially to a Fibonacci level or the previous resistance right here will turn support right here, this becomes a higher low, then this becomes a higher high, and then we continue until the trend is broken, which we're gonna have a look a little bit later. Absolutely the same for a downtrend. We have a push down, we have a low, we have a lower high, we have a lower low, which goes below the last low, then we have a lower high, which goes right here, and it should always be below the most recent lower high. So there is a very important rule, guys, that you should follow. Let me try to explain it. So in a downtrend, the market should never break the most recent lower high. So if this is your lower high, the market can trade anywhere in between these regions right here, but never break above. Because if it breaks above that lower high, then we are potentially changing the environment and we're changing the structure, right? And absolutely the same for an uptrend. If you have a trending market to the upside, this is a higher high. So if this is your higher low, this is what we're always going to spot and always going to mark on our chart. If the market starts to break and actually break below that higher low, then we are no longer in an uptrend. Alright, and then what we can expect is the market to pull back for a lower high and continue to the downside. Alright, so I hope this is not too fast. If you want a detailed explanation of market structure, make sure to let me know down in the comments and I'm gonna explain it beautifully in a very relaxed manner. But right now I really want to get into the nitty-gritty stuff, so let's get into it. Secondly, so first of all, again, remember, what is the overall direction? Secondly, we want to have a look at the most recent highs and lows that make sense to us. Alright, so again, I don't want you to have a look at the chart like this. Don't open your chart like this. Like, is it wrong to have a look at market structure? For example, this is my swing high, my swing low, swing high. It's not wrong, but this is not what we do. what you have to do is go to the downside right here, hit the refresh, and hit a few pluses like this so you have a clear chart just in front of you guys. This is what you need. You can see this is 29th of September. This is like 18th, but we need just a little bit of price action on the full hourly time frame, or depending on the time frame that you trade, you can have a look at the daily as well. But don't on the daily like this, but zoom in and try to have a look what is happening right now, right? So back to the full hourly time frame. What we want to spot is where are the major highs and lows. For example, if I have a look at this market, I'm going to say, okay, major high is right here. And what makes this high major? Well, it's the major, like it's the highest high right here. It doesn't have any price action around it. So this is the major high. And where is the major low? Well, it was right here. This is a chart from like a live chart from today. So in the morning, when I had a look at the chart, I was looking at it like this. So what I saw is that, okay, we have the high and we have the low. This was actually on the left, the higher low formation, and then the market was piercing through right here. So we are still technically in an uptrend. All right. So this is how I look at the market. But what is happening right now is the market has dipped below. So we are potentially changing the market environment and we're changing the market structure. Although at the beginning we saw that the market was trending up. And this is the third rule. After we identify the major highs and lows, we want to identify minor structure as well. What I mean by minor structure? Well, if you really zoom in, again, you're gonna see levels and price action like this. For example, this little candle and, for example, this bullish engulf right here, that creates a lower high. This one creates a lower high as well because we have a push pullback. We have a push pullback. So this is a lower high, and right now we're actually having the lower low. And what do we expect right now, guys? We expect a lower high in order for the market to continue down, right? So that is the third rule. And then what we have to do, guys, is just we have to mark them. What I would advise you to do right now is just go to your charts, grab the text tool or the callout tool. So for example, right here we see we have a consolidation. After the market has broken the most previous high, what does this make? It makes a higher high. So you do HH. Higher high. Then when the market pulls back, what does it create? It creates a higher low, right? So you type HL, higher high, right here again. And then we have a little higher low. But where is our major structure? It's exactly right here. And why? Because this is the structure that makes sense. Up until that point, this structure is not really major. But after the market pulls away, then we make it a major structure. Alright? So if I'm to recap what we learned up until now, so first of all, we start with the overall direction and we just eyeball it. When you open your chart, what is the first impression that this chart makes to you? Is it going up or is it going down? In the morning when I saw this chart, the market was staying right here, so I said we are going up. First things first. Then we want to have a look at the major highs and lows, the ones that make sense, alright? Why? Because then we have minor structure. We have minor lower highs and higher lows, and this is a little bit more advanced. I will not advise you just to go into it because those are little structures like this that potentially form a structure on the hourly time frame, because one 4H candle in the middle is not really significant, but when you go to the hourly time frame, you have a push, you have a pullback, lower high, and then you have a lower low, and then you have a lower high, right? So this is your minor structure, okay? And then we just have to mark them with rectangles. We mark the major structure with rectangles, and we can potentially mark the minor structures like this with little lines, so that we potentially know that the market is stepping down. Right? So I just want to have a look at some example, guys. Let me just remove all of those drawings. So imagine we have this chart like this. This is from the morning, and I actually provide a little analysis on Telegram on this one. So once you open this chart, what is it doing? It's going down. Even a 5-year-old kid can say, yo, it's going down. Where is the major structure? When you zoom in a little bit, like we don't care what happened right here at the top, we zoom in to try to see where the market can react right now, right? So what I see is that we have this area right here, all of those wicks. So what I do is I catch bodies to wicks. You can catch, like, for example, a certain zone, because right here we have a lower low that got broken. Retest it with a minor structure, as you can see, but again, this is a lower high on the hourly time frame. This is what we're gonna trade after we create our trading plan, and then we go for a lower low, then we retest, lower low, and right now we have an equal lower high, but again, we're still looking for buys. So this is our major structure, and to the downside we have the low that the market can potentially come into if we take a short or either break for a potential lower low. We mark the structure. For example, this is my lower high, And then this to the downside is my lower low, and we're ready to go. This is it. So what we have to wait for right now is for the rules to develop and for us to be able to take a trade. And again, as you can see what happened, the market broke above that lower high. And what I said earlier, if the market breaks above a lower high, we're no longer in the downtrend. And you should, guys, know this because this is from baby pips. All right? So make sure to do your homework. We're having a push. So right now, what do we expect? A pullback. All right? Just have a look at another chart. This is too choppy. Yeah, let's have a look at this one because this one was too interesting. So when you open this chart, what do you see? I see up. All right? First, what do I see? I see up. Second, major highs and lows. We zoom in a little bit. Where is the major high that makes sense? For example, if I have a look at the most recent price action, I will take this one, which actually aligns with the one on the left, but I'm going to take this one as my major high. And where is my major low? Well, right here, for example. Imagine that this price action wasn't developed because it wasn't this morning. And so what do I see on this market? Are we going up or down right now? Well, it's more of a consolidation. Do we have minor structure? Yes, do we have. And this is where it gets tricky because this one right here created a lower high. And as you can see from the top, we have that high. We have a higher low. Perfect. Then the market fails to break above. This creates either a double top or a lower high. Then the market pushes lower, then pulls back. And this price right here is lower than this one. And so what do we have? We have the price action descending, and if I go to the hourly time frame, we have a push and a pullback for a lower high formation, and we actually took a short on Euro Aussie. Alright? I hope it's making sense by now. How do we, flick through minor and major structure? The major important, but the minor is when you have to look a little bit deeper in order to understand where the market is actually going. Alright? So, next step is to create a little bit of a trading plan. So let's just quickly create a little one, and then I'm gonna show you some examples. Alright, so here we are with our sweet little trading plan. Again, guys, we start with the overall direction. When you just open a chart, where is the market going? Is it up, down, or sideways? Then we try to spot our major highs and lows. Where is the major structure that the market is reacting to? Alright? Then we have the minor structure, which can be a little bit tricky and definitely requires work. And it's a little bit hard to spot, and I would advise you to go to the lower time frames maybe, because for example, this forward candle that you see right here, this bearish candle, this is creating a higher low formation, but it's not major, it's minor. And when the market pushes up, it creates a higher high. And so on the pullback right here in those wicks, we can actually take a long. And this is what is going to provide us with more opportunities. But if you are unconfident with this one, then you can definitely stick to major structure. And then again, a very nice rule. Where are we now? Where is the price? Is it at a lower high or a higher low? Because you want to sell at a lower high or buy at higher low always. When the market is pushing strongly to the downside, creating a lower low, you don't want to trade. We wait for the pullback. Or when the market is strongly pushing to the upside, creating a higher high, we don't trade. We wait for the pullback. And the pullback, always wait for at least 1 to 2 4-hourly candles. 1 to 2 4-hourly candles. Again, I repeat, it's not hourly, it's not 15-minute, hourly, 4-hourly candles of pullback. Alright? 1 is good, 2 is even better. Alright? So what we have to wait for right then is for a confirmation. Potentially the 4-hourly candle can be itself a confirmation if it's a rejection. Or if you don't see it, then you can go to the hourly time frame to have a look at morning star, evening star, bullish engulf, bearish engulf, pin bars, dojis, indecision candles, and all of that stuff. That works pretty nice. And then you can decide to either take it from the hourly time frame or go to the 15-minute for an execution. Alright? Very simple. Let me give you a few examples. I think this one is a pretty nice chart. We can even start from here, have a little back testing session maybe. I'm not gonna use the replay tool because it's potentially gonna take a lot of time. But starting from right here, ignore this on the left. We have a major structure. The market is reacting to it. And then we have another major structure right here. The market is forming some sort of minor structures right here, but let's pay attention on that break below, alright? Because this broke the major structure right here and even this one. So this is pretty major and we are for sure looking for shorts. Then what we can do, guys? Well, we have to wait for at least 2 or 1 4-hourly candles. Do we have them? Yes, we have. Can we look for shorts? Yes, we can. Then we can Yeah, I'm that used to replay too. Then what do we have to wait for right here is potentially for an hourly candle to show us that there are some sellers incoming. Here it is, bearish engulfing the previous candle. What we can do in this occasion, we can drop to the 15-minute time frame. We have a little bit of an uptrend. Where is the potential structure that the market can retest? I see a minor structure right here, and this is part of my rules as well. I would usually take it like this, and then what I will do is I will set a limit order right here. Stop loss potentially above right here, and then I'm gonna go for a lower low and an extension target, which would be around right here. And then the market, very nice, triggered me with that wick, and then we know that it went down, potentially hitting take profit. Following the same process, what is the market doing right now? Do we take a short? Nope. We wait for a pullback. Let's wait. What the market is doing, one candle, that is perfect. We can already start looking for sales, right? So we can already drop to the hourly time frame, 2 candles. Perfect. And the candle itself, guys, it's creating minor structure because this is not clear. This is not a major structure like this that you have price action all around. This is just minor structure with 2 wicks, but it's creating a lower high. Dropping to the hourly time frame, we already had a little bit of bullish bearish formation and we should have already been in the trade. Right. So I told you we can even look a little bit earlier. But as you can see right here, double top, push to the downside, lower low, break of the major structure. And again, guys, very good tip. Structure works on every time frame. So again, you have the same high. This is broken. This is a lower high. Can we take a trade from right here? Yes, we can. And we're going to go for it. We can take a trade from right here. Make sure that the stop loss is safely above the structure so that if the market breaks above, then we are invalidated and out of the trade. And then we can potentially go for a lower low. And let's see what the market will do. Come on, don't freeze with me. All right, we're up. And then I will just go to the 4-minute time frame. And we have to wait for right now for a lower low. And we're already making it. As you can see, we just made a lower low and we're currently strongly pushing to the downside. So what do we have to wait for? Remember, 1 to 2 4-hourly candles of pullback. Because where are we now? We are at a lower low and we don't want to sell. Beautiful. The market is starting to pull back. Can we go to the hourly time frame? Yes, we can. But this week we'll get filled potentially. I bet. Yeah, very good. So right now we can potentially go to the hourly time frame. So this is a very good rejection right here. So what I was waiting for right here is a little bit of a rejection from this area. We got it. Drop into the hourly time frame. What do we have? We have the market creating a bearish engulf, and right now the market is pulling back a little bit, so we have the confluences, what the 15-minute is doing. We have an uptrend, and then we have a little bit of a minor structure changing. So if you want to be even more conservative, we can wait for a break of the major structure, because this is right now a major structure, right? And if I wait for the break, here's your break. What is this, guys? This is a lower low, alright? And right here we had a minor structure of a lower high. What we have to wait for right now is for the market to retest potentially that area, or just go for the short, set a limit, or place your stop loss on right here. Then your take profit goes for a new lower low, because if we're in a downtrend, the market should be creating lower highs and lower lows. The market nicely pulled back into that area, and then we hit take profit, and then we repeat this, guys. You see how simple it is? You get all of those 3 trades just following simple market structure. The hard thing is potentially for you being able to spot the entries, but that is perfectly fine. Oops, I missed this one. Again, guys, have a look. 1 candle, 2 candles, rejections, double top I see as well. Going to the hourly time frame. Potentially we can take a trade from right here. And then I remember that the market actually shifted. So if I delete everything again, when you sit on your chart, what do you see? I see the market going down. Where is your major structure? Right here. Where is the downside? Right here, potentially. We don't care much about the downside because the upside is more important, because if the market breaks above the upside, then we're no longer in a downtrend. So what is the market doing right now? It's creating a lower low. What we have to wait for is a lower high. And remember, 1 candle to 2 candles of pullback. Here it is. We potentially have 1, 2 candles of pullback. We can go to the hourly time frame. We have a bearish engulf. Can we take a trade? Absolutely yes. And we're gonna win it. Alright, this is our trade. We're gonna win it. But what happens later, again, we set the next morning on the screen. We have a look, where is the major structure? Right here. We even broke this one, so we can potentially expect to retest. Where is the market? Lower low, 1 candle of pullback, so we can start looking for sales. What happens? As I told you, the lower high is of higher importance, because when this structure gets broken, then we can no longer look for shorts. Sorry. We have a high. What do we have right here? we have a potential higher low formation. What do we have? We have four full hourly candles of pullback after the market changed structure. Can we go to the hourly time frame? Yes, we have. Do we have any confirmation? No, we don't. So we wait for something to happen. You can see the market goes below, and then we start having some bullishness, and then potentially we even emerge above. So the trade could have been taken right here with the same concept, downtrend, break of structure, retest. Alright? Next day, again, we repeat the same process. Where is the major structure? Right here. Right? This is the higher low. As long as the market stays above this one, we are taking longs. Whereas the market right now, it's creating a higher high. Do we want to buy? Nope. We want to wait for a pullback. What is this? One candle of pullback. Can we look for a trade? Yes, we can, of course. But we rushed a little bit, and then the process repeats again. Where is your structure? Right now, it's right here, because we always adapt. Because you always have to move your structure, because once you have a break of recent structure, then you have to be adjusting to the market immediately. Alright, and we can potentially take a trade right here. Then we have another push. Where is the major structure? It changes to right here. So right now we're looking for longs, and we're going to be taking longs from right here. And then we potentially take a long. The market breaks above, but right now it's again below, and it ends up in a consolidation. And how I'm going to analyze this market, I see that it's reacting from this major area and from this major area on the top. And this is how we're going to conclude this video, guys. I really hope I didn't make it too long. Make sure to let me know if it was too long. And if you want actually more examples of this one, of me just reading structure, providing you with simple trading plans with different strategies that you can trade. And I really hope this is good for you. Please let me know as well if you don't understand, like lower lows, lower highs, and higher lows, because this is crucial. And of course,